Here is the summary of the US stock market recap and the outlook for the upcoming week. 1. Weekly recap. USA stock news, March 22nd to 28th, 2026. The past week in the US markets was defined by heightened volatility and a risk-off sentiment, primarily driven by geopolitical tensions and energy price shocks. Geopolitical oil shock. Rising tensions pushed crude oil prices past $110 per barrel. This sparked immediate concerns about a resurgence of inflation, causing a ripple effect across global markets. Yield curve shifts. Following the mid-March FOMC meeting, Treasury yields fell slightly as investors sought safe havens. However, the market began pricing in a higher probability of interest rates staying higher for longer due to the oil-driven inflation spike. Sector performance. Technology and industrial stocks were among the worst performers, burdened by rising energy costs. Conversely, consumer staples and defensive plays showed relative resilience. Earnings pressure. Early reports showed that while revenue remained steady, margins are being squeezed by higher input costs and uneven consumer spending. 2. The week ahead. Key events, March 29th to April 4th, 2026. The upcoming week is a super week for economic data, featuring critical employment figures and high-profile Fed commentary. Date event, data release importance. Monday, March 30th, Fed Chair Jerome Powell speech high, clues on the interest rate path. Tuesday, March 31st, Nike NK earnings report high, a proxy for global consumer health. Wednesday, April 1st, ADP employment change and ISM manufacturing high, labor market strength and inflation. Friday, April 3rd, Non-Farm Payrolls, NFP, and unemployment rate critical, the ultimate market mover. 3. Action plan and strategy. As market volatility increases, the following strategic approaches are recommended. Monitor the oil inflation leak. Closely watch whether the oil surge is temporary or structural. If inflation expectations rise back to the 4% range, the hope for Fed rate cuts may vanish, putting further pressure on growth stocks, especially tech. Defensive rotation. With the market sensitive to uncertainty, maintain exposure to defensive sectors such as healthcare, utilities, and consumer staples to hedge against volatility. Employment data as a pivot. Friday's non-farm payrolls, NFP, will likely dictate the market direction. If employment is too strong, it may kill rate cut hopes. If it's too weak, recession fears will surface. Look for a Goldilocks number. Not too hot, not too cold. Earnings quality check. Use Nike's earnings to gauge if consumers are pulling back amidst high prices. This will be a vital indicator for the broader retail and discretionary sectors. Thanks for watching. Disclaimer. This video is for educational and informational purposes only and does not constitute financial advice. Stock investing involves risk. Please conduct your own research before making any investment decisions.